Aloha, small account traders. My name is Brent, and today we're going to talk about selling put options in your small trading account. If you have a small trading account and you want to be doing all types of fancy high-flying maneuvers, weaving in and out of the stock market, then hit that subscribe button, because over here at Small Account Traders, all we do is discuss trading in small accounts. But I have to warn you, I am not a financial advisor. I'm not an attorney. In fact, I am not even a doctor. So before you start doing any type of trading in the stock market, consult your financial advisors, consult your legal team and attorneys, consult your religious and spiritual leaders, consult your favorite political candidates from whatever side of the aisle you sit on. Because if you make the wrong moves in the stock market, you could lose money. And let's face it, we're small account traders. We don't have much money to lose. Selling put options. I'm going to give you the quick and dirty of what a put option is. Here is FCX. A little while ago, I sold a few put options on FCX. Right here, I sold one contract that will expire July 17th in 9 days. For a strike price of $10. Right above it, I sold two contracts that expire July 10th in 2 days for a strike price of $9.50. So what this means is in this time frame from me originally selling it to the day it closes, that I would be obligated to buy 100 shares per contract of FCX at these particular strike prices. Generally, the way it's going to go is if FCX is trading below that by the time the contract expires, then I would be assigned those shares of stock. There's a lot of legalese and all types of stuff that goes into it, and this by far is not the academic answer that you really deserve. So when this video is over, if you feel, and I feel you really do, deserve much more of an academic answer, then go to your handy dandy YouTube search bar and then type in what is a put contract, and you will be amazed at the video editing quality of these stock options traders. They're going to have animation flying in and out, and then in a short amount of time you will get your academic and theoretical fill up to your ivory tower eyebrows, and then you'll be satisfied with that. So when you sell the put contract, in this case, when I sold this one contract for a strike price of $10, I was paid handsomely $5 to do that. As long as FCX stays above $10 by the close of business in July 17th, then I will keep this handsome payment of $5. If it closes below $10, then not only will I keep this handsome payment of $5, but in 9 days, I could be the proud owner of 100 shares of FCX at a discount, mind you, since today it's almost at 13. The probability of that happening is pretty darn low. It's almost, maybe there's less than 1% chance of that happening. But, you know, I can dream at night, right? So that's the basics of a put contract, of selling the put contract. So now in your small trading account, let's assume that you have $1,000 in your small trading account. So for this strategy to be effective and allow you to retain the most amount of US dollar currency in your account while you're trading, then we are going to assume that if the contract expires in the money, then you are going to purchase the shares of stock. So you need to find a stock that you could afford to purchase 100 shares of. Now, it's true that you could sell a put contract, and instead of purchasing the shares, you could buy to close that contract. However, usually, and maybe all the time, but let's just say usually when you're doing that, you're doing it at a loss. And of course, we're small account traders. We can't afford losses, right? So we want to maximize anything. The other thing I really love about this strategy, for example, earlier today I sold a credit spread here on SPY, and it was only for one day. So I sold it earlier in the day. It expired worthless. I got to keep the whopping premium of $4. And if I would have been wrong, though, I would have lost money immediately. So the reason I love selling put options on stocks that I would like to own at prices I'm comfortable owning them at is because if I'm quote unquote wrong and the stock price goes below $10, then I don't directly lose money. The first thing that happens, instead of losing money, is that I take ownership of 100 shares. And then from there, depending on how long I have it, I could get some dividends. I could do something like sell call contracts against it. So I feel like it's a very forgiving thing. But the first thing you need to do is you need to find a stock that you could afford to purchase at least 100 shares of that's in your price range. Let's assume that you have $1,000. So maybe it would be nice to find a stock that was around $5, maybe $6. So that way you could sell one contract and you could keep some cash on the side just for a little bit of safety net, safety cushion or something like that. So over here, I have 3 different stocks listed that I personally trade. They're all around $5 or under. MUX, NLY, and AUY. Now, before you decide to, if these stocks fit into your personality and profile, what you need to do is create an account here for free at Koyfin. And this will allow you to do some fundamental analysis. I get it. You might think it's boring. It doesn't matter if you think it's boring or not. Do it. Create this account and do some research. Don't just do the stocks that I like to trade. Do the stocks that you like to trade. In this part, income statement, balance sheet, cash flow, if you're totally unfamiliar with it, when you sign up for Koyfin, they're going to send you videos on how to use it. And also you can go to your handy dandy YouTube search bar and you can type in how to do fundamental analysis. You might not like it. Do it anyways. That's how life is. There's things that in being in the business world that you might not like. I don't like it, but guess what? Those that do the things that they don't like to do, then they get some rewards that they like. If you refuse to do something that you don't want to do, even though it's required to get this bigger reward, well, good luck. So whether maybe you won't have a problem with it all. Maybe you're like me and you think fundamental analysis is pretty valuable. The reason why it is valuable is because you might be owning the stock for several months. And what you don't want to do is be selling put options on something like Hertz, Enron, Chesapeake Bay, Blockbuster. If you don't know those names, do some research on them. Find out what happened to those stocks and why you wouldn't want to be selling put options and then be assigned delivery. And I have some great news for you as we end this video. The great news is that this is video 1. I believe that selling put options is instrumental to a small account trader's success. It is my bread and butter strategy. Even though I do other things, I absolutely love selling put options on stocks that I want to own at prices that I'm comfortable buying them at. It just feels so good to see these handsome premiums of $5, $11, $4, 7 minus 3, $4, just rolling in my account. Oh, that's not even, that's something else, so I can't count that one. But I'm just so in love with these small premiums rolling into my small trading account. It's just great. So this is part 1 on selling put options in your small trading account. So hit the subscribe button if you haven't done so. That way you can be informed when part 2 comes out. And if you could do me a big favor, if you really love put options, you want to learn more about selling put options, hit the thumbs up button. And regardless if you liked it, didn't like it, leave a comment below. Let me know how terrible my video editing is. Let me know how I'm wrong about everything. Or let me know that that I'm going down a good path and you want to see more videos like this. Let me know something. Thank you very much. You guys have a fantastic night, and aloha.